Taxes are something everyone deals with, but very few people truly understand. And that gap in understanding is quietly draining your wallet every year. Most people treat taxes like a fixed cost. You earn money, you pay what you owe, and move on. But the reality is very different. The tax system is filled with rules, thresholds, and opportunities that can either help you keep more money or cause you to lose more than necessary. The biggest issue is that many costly tax mistakes don't feel like mistakes. They seem normal. One of the most common ways people overpay is by ignoring tax deductions. Many assume they don't qualify or that it's not worth the effort. But things like work-related expenses, education costs, or a home office can reduce your taxable income if you actually claim them. When you skip deductions, you're essentially choosing to pay more than required. And over time, that adds up. Another major misunderstanding is how tax brackets work. A lot of people believe that moving into a higher bracket means all their income gets taxed at a higher rate. That's not true. Only the portion of income within that bracket is taxed more. This confusion leads people to make bad financial decisions like avoiding raises or turning down extra income because they think they'll lose money in taxes. In reality, earning more still means keeping more. Timing is another factor most people overlook. When you earn income or make certain financial moves can affect how much tax you owe in a given year. Shifting income or expenses slightly can sometimes lower your tax bill, but if you're not aware of this, you lose that advantage. Retirement accounts are another missed opportunity. Contributing to certain plans can lower your taxable income now while helping you build wealth for the future. But many people don't contribute enough or at all because they're focused on short-term spending. This creates a double loss: higher taxes today and less growth tomorrow. Finally, there's capital gains tax. When you invest, how long you hold an asset matters. Short-term gains are usually taxed at higher rates than long-term gains. If you're frequently buying and selling without considering taxes, you could be giving up a large portion of your profits without realizing it. In the end, it's not just about how much you earn, it's about how much you keep. Another major way taxes drain your wallet is by not planning ahead. Most people think about taxes only once a year, usually when it's already too late to make meaningful changes. But tax efficiency isn't about last-minute fixes. It's about making smarter decisions throughout the entire year. One common issue is not setting money aside for taxes, especially if you earn income outside of a regular paycheck. If you're self-employed or doing freelance work, taxes aren't automatically withheld. Without a plan, you can end up with a large bill and no money saved to cover it. Even employees can face problems if their tax withholding isn't set correctly. If too little is taken out, you owe money later. If too much is taken out, you're basically giving the government an interest-free loan instead of using that money for yourself. Tax credits are another overlooked opportunity. Unlike deductions, which lower your taxable income, credits directly reduce the amount of tax you owe. That makes them extremely valuable. But many people don't take advantage of credits simply because they don't know about them or forget to claim them. Whether it's education, child-related, or energy efficiency credits, these can make a real difference in how much you pay. Poor record keeping is another silent problem. If you're not tracking your expenses, income, or financial activities properly, you won't be able to take full advantage of tax-saving opportunities. Worse, you might even overpay because you don't have the documentation needed to prove what you're allowed to claim. Staying organized isn't just about being neat, it directly impacts your finances. Location also plays a role. Depending on where you live, state and local taxes can take a significant portion of your income. Many people don't realize how much their location affects their tax burden until it's too late. While moving isn't always realistic, understanding how location impacts taxes can help you make smarter, long-term decisions. At the end of the day, taxes reward awareness. The more you understand how they work, the more control you have over your money. You don't need to become an expert overnight, but taking the time to learn the basics, ask questions, and stay intentional can help you keep more of what you earn. Because the real goal isn't just making money, it's making sure you don't lose it unnecessarily.